Welcome to stockmarketfunding.com. What we would like to bring to your attention is things that we've been telling you about for a number of months. We have the live videos. We have our live stock radio shows that are archived. And what I want to bring to your attention is this. Credit agency Moody's has downgraded Ireland's government bond rating to A2, blaming banking liabilities, weak growth prospects, and a substantial increase in debt to GDP ratio. Now, over the weekend, I did the Dow 5000 and I did the S&P 600. And in this country, when we had the stimulants in this country, we went up to 3% GDP in the U.S. If they have the tax increases and the hikes, you're going to go to 0 GDP in the U.S. If they do extend the Bush tax cuts, then you're going to go still from 3% to 1.5% GDP in the U.S. One of the key highlights that I would like to say is the support provided to the banking system, which includes the transfers of billions of euro worth loans from banks to the National Asset Management Agency. Well, what we would like to tell you is that Ireland has a problem. The emerging markets around the world, they never cleaned up everything. When they were at the G20 meeting, none of these other worldwide leaders wanted to go down the wreckage that Obama has gone down with high deficits, higher taxes, small businesses will suffer around the world. Look at here, people. If Ireland isn't going to spend as much money, Europe isn't going to spend as much money, Germany's going to come down spending, that means that the earnings cycle in the U.S. will go down. I've told everybody that we have hit July 2010 earnings season that we're in right now, and I've told people that this is the peak trough in those earnings. And I've got lots of live videos, lots of radio shows, lots of different things that you can go back to on the website, and lots of things that will tell you exactly what this means. Remember, we were well ahead of the curve. The government debt metrics could stabilize earlier than is currently being assumed. So, look at their debt is their debt. Their debt never left. The worldwide debt that happened in 2008, it never left. Stock markets came up off the lows, big deal. People re-leverage. We're in a new deleveraging process potentially. And I'm telling you right now that one of the things down here is that the sales are likely to go well in line with the Portuguese auctions last week, given the large concessions priced. And senior debt strategist Wilson Chen wrote, well, who cares what he is? He isn't right. What I'm telling you is that worldwide growth with higher taxes in the U.S. and slowing spending around the world is not forward sustainable earnings at the current level in the stock market prices, and Moody's has downgraded this, and an A1 rating with a negative outlook. On July 2nd, the agency gave the bonds to an little a rating with a negative outlook. That was back then, but now you can see what they're doing. Another thing I would like to say is Moody's is now viewing the upside and downside risk as every balanced at the current rating level. Well, I don't believe in Moody's. They haven't downgraded. U.S. debt is going to go to all-time highs. I will be doing a special on the collapse of California within 12 months. That means that the state of California, just like these little countries here, well, the state of California is like a little country, and they're going to be just like Lehman Brothers. Lehman Brothers has defaulted. But guess what, people? If only you knew what I knew, and if only you knew where this world was going forward looking, what a breath of fresh air. You do have an opportunity to come to stockmarketfunding.com. You're not going to be told a bunch of false crap. You're going to be given the real stuff, how to trade it, how to manage risk. So that's the credit agency ratings has downgraded the bond rating. And basically, it's our privilege to tell you that on Saturday mornings, we have a radio show called SMFI on the Economy. We also have SMFI on the July earnings season. We have lots and lots of after hours trades. We've got earnings updates and reports for you to look at. Doesn't mean that you know what to do with them. We do know what to do with them. We do know how to train you what to do with them. And we need to train you on buy the rumor, sell into the news. And let me tell you something. Go visit our homepage. Find our video, Dow 5000, S&P 600. Based on higher taxes will collapse the private sector. Small businesses will go under. Family-owned businesses will go down. You cannot have higher taxes. And if you take off the Bush tax cuts and society in the U.S., society and businesses will be taxed at all-time highs, less discretionary income, and what's going on around the world. Let me tell you something else. How about this? What about the U.S. debt being downgraded, just like Moody's has downgraded Ireland? Of course, Moody's isn't going to downgrade it. I'm going to pull up another one where the Chinese is thinking about downgrading U.S. debt. And if the Chinese want back their $1 trillion that they have in the Treasury, how is the U.S. Treasury Department going to pay them back when they're broke? That's the end of the story for today. Once again, it's our privilege to try to help you if you want it. Spread the news. Put it on Twitter. Put it on Facebook. Let your friends know. Come back, visit us. There is a lot of bad things that can make these markets go to all-time lows. It depends on what the U.S. government does. It depends, can these emerging markets or emerging countries around the world, they're all riddled with debt. Not a very good recipe to prosperity, to the upside. Our prosperity is made when there's failure and things go down. We make lots of money. And we have over 150 different proprietary risk management tools called 150 different type of financial tools. That's what they are. To minimize risk, to do all kinds of things that the public has never been taught the right way. They've been fed a bunch of hogwash over the years, and they bought into it, and that's what the public does when it comes to the stock market. They buy into all the crap. Anyway, it's been my gift. I hope it's your gift, and I hope that we can all have gifts together at stockmarketfunding.com. Call us today at 702-685-0772.